Today, we're breaking down a plan that could add more than $1,000 to your family's annual expenses and, maybe trigger a global market shock. This is the 2025 Tariff Plan explained.
So, what exactly is this plan? Have we ever tried something like it before? And what could it really mean for your wallet and for the global economy? Yeah? Let's get into it.
Okay, first up, what are we actually talking about with this 2025 tariff proposal? Let's break down the absolute core of the plan. So, at its heart, this plan uses some pretty powerful executive orders to slap a massive new tax on, well, almost everything we import. And this isn't about just one country. This is a policy aimed at nearly every single trading partner the U.S. has. The plan really leans on two key legal powers. One is about national security, and the other, the IEEPA, is for economic emergencies. But just look at the scope here. This isn't just about heavy industry. No way. We're talking about everything from the car you drive to the furniture in your house. But is a policy this sweeping really new? I mean, to really get the 2025 proposal, you gotta look back at how this tool has been used throughout history. Look, tariffs are nothing new. They've been used for centuries to protect local industries. We saw it with steel back in 2002, and then more broadly in 2018. But what the sources really emphasize is that the sheer scale of the 2025 plan is what makes it so different from these past examples. So what is the projected price tag for the U.S. economy? Well, the numbers are pretty striking. The Tax Foundation went ahead and ran the numbers, and their analysis pretty much boils down to this: an estimated $1,600 tax hike for the average American household, and that's starting in 2026. Now, to put that into perspective for you, in 2022, the average tariff rate was just 1.5%. This plan would launch that rate to almost 18%. According to the data, that is the highest level we've seen in the U.S. since 1941. And beyond just your household, the models project a real hit to the entire economy. We're talking shrinking GDP and costing over 500,000 jobs in the long run. And what's really crucial to understand here is that this is the best-case scenario. This projection assumes other countries don't fight back with their own tariffs. This case study on washing machines is wild. It reveals this bizarre side effect. When the U.S. taxed foreign-made machines, the price of American-made ones went up too. Now, the policy did help create about 1,800 jobs, but the cost to consumers was so high, it was like spending $815,000 for every single one of those jobs. Just incredible. But the impact wasn't just domestic. Not at all. When this plan was announced, it sent a shockwave through the global financial markets. And, well, something happened that just wasn't supposed to. The market's reaction in April 2025 really challenged a core belief of modern finance. This idea that in a crisis, the US dollar is the safest place in the world to put your money.
Okay, so normally, when global markets panic, investors have a really simple playbook. They buy US dollars and government bonds. They treat them as a safe haven. And that flood of demand makes the dollar stronger. Simple, right?
But the April tariff shock completely flipped the script. The dollar didn't strengthen. It fell, and it fell hard. And investors sold U.S. bonds, they didn't buy them. Suddenly, the safe haven wasn't safe. It was the exact opposite of what was supposed to happen. And that had a major consequence. For foreign investors holding U.S. stocks or bonds, the falling dollar wasn't a cushion. It was an anchor. It totally erased any gains they might have had and actually made their losses deeper because the value of their U.S. assets was plummeting in their home currency. So, when you put all this together, the policy, the history, the domestic and global reactions, what's the bottom line? Well, the sources show a pretty clear domino effect. First, the tariff acts as a tax, which makes imported goods more expensive. Businesses then have to either eat that cost or pass it on to you. The hope is that this will make U.S. products cheaper by comparison, but, and this is a big but, if it doesn't, the result is just higher prices for all of us. This quote from the Tax Foundation really sums up the consensus from the economic studies. Tariffs are taxes, and the evidence suggests they lead to higher prices, which in turn means lower income, fewer jobs, and a smaller economy overall. And this gets to the core dilemma. The sources lay out a very clear trade-off. Is the goal of protecting specific industries worth the wider economic cost to everyone else? That's a fundamental question, right at the heart of the 2025 tariff plan.